Hello there and welcome. I'm Tushar Chande. Are you new to technical analysis or you just want to get better at it? Then you've come to the right place. Do you see all those indicators in the blue box below? I've invented every single one of them and a whole lot more. Today I'm going to talk about a counter trend swing system that buys strength after weakness. So if you've always been curious about how to buy near a market's low or a stock's low, I can help you with that. So let's get started. As with every trade, you must be able to answer three questions. For the counter trend entry, where do I get in? And remember, this can be risky. Second, where do I get out? And third, what's the trade size? So I'll help you with that. So these are the three specific tools we'll use for this system. For the entry, which is a counter trend entry, we'll use the swing system. We'll exit on the delayed channel exit, and we'll size our trade by risking 2% of the available equity so that we can overall manage our risk in a more conservative way. A slight detour to look at my disclaimer. Please remember that systems are designed with the benefit of hindsight, so past performance is not necessarily indicative of future results, and there's risk of loss in trading. So let's continue. So this is the swing system template in the TCCT, which is Tushar Chande's complete toolbox for Metastock. And let's apply this template to Tesla so we can understand how the swing system is constructed. So this is the daily chart for Tesla, and we've applied the template for the swing system. The upper panel has the short-term stochastic RSI. Its scale is 0 to 1, and the orange line is at 0.8. So when the stochastic RSI is declining, the short-term momentum is weak. When the stochastic RSI is near 1, the short-term momentum is strong. So look at this situation here for Tesla. It was declining, and you see that the stochastic RSI was declining. Then the stochastic RSI rose as Tesla itself started to rise. We bought a few days after the low, strength after weakness, and then we followed the trend and exited at some point here. So now let me fill in more of the structure. But remember, we were buying strength after weakness. So this is the same chart as the previous one for Tesla with the template for the swing system. But I've added a couple of more lines and the double-sided yellow arrow. So the dashed green line is what's called the trigger line, and the dotted red line is the trailing stop. The double-sided yellow arrow tells you that I could write all kinds of algorithms and formulas for where the green line should be located relative to the dotted trailing stop. And then the short red line, that's just to give you an idea that we want to have some short-term momentum and have the stock or the instrument push above the previous high in order to get in. So this is the daily chart for Cintas, and again we have our trigger line, we have the trailing stop, and I have just drawn in the double-sided arrows here to show you that from a design point of view we have lots of options on how we write or construct how far the trigger line has to be from our trailing stop. And then once we have a close above the trigger line, we can write another algorithm that defines how we want to actually take the trade. That is how much short-term momentum we need, how much of a push above the high of the day when we got the close above our trigger line in order to get into the trade. And there are lots and lots of options on how you would design this. This is a chart of Abbott to again clarify the same ideas. Abbott was clearly declining. This is our trigger line. This is our trailing stop. We get a close above the trigger line. Then the solid red line is sort of our entry level, which is above the high of the first close above the trigger line. And once we get a push above that high, we are in. Then we forget about all the entry conditions and we just focus on the trailing stop to get us out. So this is just to give you a feel for how the system works. This chart shows you one of the main weaknesses of the counter trend entry. So this is an example of Abbott. The trade in the previous chart was over here. This is somewhat earlier, where we have an entry, we have weakness, we have strength after weakness, so we get an entry. but then the weakness reasserts itself. So it's very important to place a trailing stop. But in this case, the news was so bad that we had an open well below where our trailing stop would have been. So that's called a gap risk because the prices gapped below our trailing stop. So that's why we want to trade this system conservatively using only maybe 1 or 2% of available capital, simply because the gap risk is a real risk for this approach, because the weakness that leads us into buying the strength could reassert itself. And that's something we have to be careful about when we trade the system. So I want to point out that this is another important failure mode for this counter trend swing system strategy. As I've shown in the red box, using Verizon data, you could get a large number of losing trades in succession. So that's just because that's how the market is trading, and we don't know when this could occur. So one of the defensive approaches when using this strategy is that if you get 2 or 3 successive losing trades, you should stop trading that instrument and move on to something else. This is an example of sealed air. You can see that it was weak going into this period, then it rebounded. We were long during the rebound, bought strength after weakness, and we got a very nice trade out of it. And this box shows the TCCT swing system commentary, which gives you a trailing stop. So this stop is calculated for you by the system package, and every day you will get a specific trailing stop, and you have to be diligent to enter it every day if you are trading the system so that you can properly manage your risk. So now that you understand how the swing system works and what its weaknesses are, let me show you some examples of how it has worked in the recent past. This particular chart has the SPY ETF, and during this uptrend which went in waves, you see that we were able to take advantage of the weakness to buy strength after weakness. So for example, we had the weakness here, we have one losing trade, another good entry, a nice rebound, and you can follow along to see that this buying strength after weakness worked quite well during this time period. This is an example of buying an ETF called the US Commodity Index Fund. The upper panel has the Chande trend meter, which is a longer term measure of momentum. You can see that this period was a time when the fund was quite weak, but as part of this weakness, when we got a bounce, we were able to get a very favorable entry, and then that resulted in a several month uptrend. So you could get some really interesting entries with this process. So this is an example of using the swing system on the NASDAQ futures with a 1-minute chart. I don't recommend that this is the best strategy for everybody. I'm just showing this as an example of how the system might work. So for example, on the right hand side, when you got this rebound and another rebound, you could get some very nice entries, and the rebounds occurred when the Chandra trend meter was weak. So as an example of buying strength after weakness. So here we have a downtrend. We had a little weakness with the trend meter below 10. Then we get a rebound, and we were able to capture that rebound. So this is again not a strategy that's right for everybody, but this is just an example of how the strategy itself can be applied on a very short-term time frame. This is a NASDAQ futures chart again, but this time on a 10-minute chart. And if you look at the trend meter above, you see that it was in a downtrend, a sustained downtrend. So we are in this downtrend. We want to buy strength after weakness, and you see the entry here was really quite effective in catching this very nice rebound. So again, because this is a futures market, it may not be the right market for you, but I just want to illustrate the concept that you could use the swing system on a relatively short time frame like 10 minutes. The Metastock package has a scan that we can also use to find opportunities. It tells you when there has been a breakout or an entry within the last, say, day or two. And then this is an example of, in the upper box in their power console, you can select the swing system with delayed stop as the template. And in this case, I've used FX majors or just the cross rates to again show you that you could use this thing on any instrument. This is what the scan looks like, the results of the scan, and there are a number of cross rates that provided entry. So let's look at a chart to see what it looks like. This is the yen British pound cross rate. Again, I'm not recommending that this is the right instrument for you, but I'm just trying to illustrate the idea. We have a prolonged period of weakness here in the upper panel, which is the stochastic RSI, a short-term 7-bar stochastic RSI with a scale of 0 to 1. When it's at 0, you're on a downtrend, and indeed this cross was trending lower. As it rebounded and got a close above the trigger line, we were able to find an entry point as it pushed higher above this high. Again, this is a cross rate. I'm not recommending that this is right for everybody. I'm just trying to illustrate the idea of how you could apply this logic in different time scales and across all kinds of instruments. This is how we would calculate the trade size. If the entry price is X that we know and the exit price is Y that we know because of the stop, and we want to risk say 2% of capital, then the quantity is simply Z divided by X minus Y. Now it's fair to ask, how will the system work in the future? Of course we don't know, and not every single trade will be profitable, but because we use the same rule on every instrument, there's no optimization and no market specific features, the rules themselves are robust, and this improves the probability of success in the future. Thank you for listening to all those slides. If you like this idea and if you'd like to explore it further, you can find it in Tushar Chande's complete toolkit from Metastock. You can get it by going to metastock.com/Chande. The package itself has many other features. It's easy and simple and powerful. It's very clear. It tells you where to get in and where to get out. You can use it on any time frame and anywhere in terms of any market condition, any exchange, any type of instrument. Thank you very much for staying all the way through the end. If you have a moment, you can look at my blog at chandeindicators.substack.com. Thank you again, and I hope I'll see you soon. Until then, have a great day.